And Mr. Suvamoy Saha, MD of Eveready Industries, is joining us from a battery or flashlight battery company. It is gradually transforming into a consumer electricals company, and a lot of stuff is being done there. Ms. Saha, afternoon. Thank you so much for your time. There are a bunch of H&N, even retail investors out there. I know, tracking your company very closely, there's a lot of investor curiosity and interest on how the transformation is progressing. So tell us, how are the kind of achievements you've made so far, and what are the next milestones which you're talking about? Is it increasing distribution, widening your product profile? What exactly is on agenda?
Okay, a very good afternoon, and thank you very much for having me in your program. So let me first describe the business that we have. So the business comprises of three verticals: the traditional core category of consumer batteries, in which we hold a very dominant market position. Our market share is 54%. Then another traditional category, flashlights, in which we have about 20% of the market. That again has two segments. One is the battery operated flashlight, and the other is the rechargeable, newly emerging rechargeable flashlight. In the battery operated one, we hold more than 50%, and we are quite under indexed in the rechargeable segment because we have entered it very late. I mean, only recently we entered that segment, only last year. The last category is a relatively newer category for us, which is lighting. Our address market is the consumer lighting replacement market, which is a 10,000 crore market, and we are a very, very small player, but with, I would say, big growth aspirations. So on the journey of transformation that started from last year, prior to that, the company was relatively on a flat kind of situation where there was no growth experienced for the previous 5 or 6 years. Last year, we managed to grow double digit. In fact, it was in excess of 10%. And with that, we have taken growth as a top-line agenda for the management team. And we are targeting growth. And in the immediate foreseeable future, the growth, there is enough area to be exploited in our current three categories. So over the next 12 to 18 months, the growth would come from these three categories. And then down the road, we would look at maybe a fourth category, which can also add on to the growth momentum. For the quarter that went by, our growth was slightly muted relatively compared to the previous year. We had a growth of 8.5%. That was primarily because we, as part of the transformative journey, we took a new route to market revamp, which led to some amount of changes and dislocations, etc., which is how our growth was slightly lower than what we ended in FY23. We ended at this quarter, we had 8.5. We are still addressing some of the changes that have taken place because of the transformation, and we would perhaps continue on a similar growth path during this quarter, but from the second half of this year, we hope to jump back to a double-digit kind of a growth. That is what I have to tell you about our growth journey.
This is Vinny joining in the conversation as well. I got the point in terms of the growth that you're saying, and obviously second half of the year you're expecting a double-digit growth to start coming in as well. You'd also spoken some bit about in FY22 that about doubling the revenues to by FY26 around that. So FY22 we had seen it around 1,200. FY23 it was at 1,300. So are you on that run rate to achieve those doubling of revenues by FY26?
So a small correction, the base was FY22 and we said 26-27 financial year when we are targeting doubling that turnover. You are very correct. From a 1200, actually 1172, be precise, we want to grow double of that by FY27. All the transformation that is taking place within the company, the way we are distributing the brand portfolio, the brand communication is totally geared to achieve that target. And we are quite confident that we will be getting there. And as I said, that in the next 12 to 18 months, we would be focusing more on our current categories. And thereafter, we take a newer category as part of that growth journey.
Mr. Saha, I also want to understand in terms of, margins, what will that margin profile look like also going forward? And also in terms of contribution from the sectors over the next couple of years, how do you see that changing? And in turn, the margin profile also changing then?
Okay. So currently batteries, which is again, as I mentioned, is our core category, accounts for about 62% of our turnover. Flashlights about 15%, and the balance comes from lighting. As we grow, because we have set a higher and more challenging growth targets for lighting and flashlights, the contribution of those segments would become higher as compared to batteries. So I would imagine that in the course of the next 2 years or thereabouts, battery would from a 62% perhaps come down to lower than 55%, and these two categories would grow. So between the two of them today, they take about 36%, 37%. They will certainly grow to more than 45%. As for the margin, battery margins are much, I would say, more attractive than lighting and flashlights. On a total blended basis, we would look at, double-digit EBITDA for this year. And going forward, it would be our endeavor to take that higher to, maybe mid-teen levels, if not higher.
Thank you so much for joining in with us this afternoon on Markets at Noon, giving us an understanding on the strategy and the growth ahead for the company.